All right, man. Yes, yes, yes. Hopefully. Back. Hmm. All right, man. Let's turn this down. Try to take out one thing at a time. I'll tell you what, man. The tech stuff gets hard by yourself. So hopefully you can hear me. You gotta run. Looks like you can. Microphones. You gotta run all this shit, man. So. All right, looks like you can hear me. I use another. For a second there, I thought, because I had too many devices going, that seems unrealistic. I don't know. So apparently you can hear me. Let me know you can hear me fine on. I don't have Instagram on right now. And sometimes people say, well, don't turn it on. It's actually a good lead generator if you're in business. We are studying investing in business along the way. Helps me to sell books. And unfortunately, most of the people that come to YouTube, you already have those books. And so you have to use other things. So I'm gonna turn Instagram on now and see if if it doesn't work, then I know it's devices that are causing my problem. So we'll see. Appreciate you working with me and then the constant stream of updates. It is, guys. Look at that. Let me turn this shit off. In the video, discard. Let me go up in here and do a surprise pop. Jesus. Let me go up in. I hate that Instagram is all videos now. It's nothing but, let's see. Look at that. Wow. How crazy is that? I gotta think this through now. Huh. Give me just a second and we'll get on with this normal stuff here. Whatever you do, man, don't throw up a rocket emoji, a stock emoji, or a money bag, because apparently that's illegal. All right, let me think this through. So I can't, if I turn on it, let me do this. Let me kill this over here. Let me kill that. Now I have no device on. Appreciate you guys working with me here and we'll get going. That's crazy, huh? So one, but see, I'm only live streaming on one. I've turned off everything. We're going to try this one more time. Go live. Live on Instagram. Now let's see if it works. Thought it was YouTube. Okay, it's got to be the number of devices. Okay, this is a problem for me. All right. Yes, 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 yes. Everybody, welcome back to Money Flow Sunday service. I'm assuming you can hear me on YouTube. If I'll check in just a second. See, I can't check on the other device because they're going to throttle me for some reason. So it's not Instagram. It's not my software. It appears to be my internet provider doing this to me. So I'm going to have a conversation with these people. All right, man. So yes, yes, yes. Welcome back to the Money Flow Trading Society's Sunday service. I wanted to dig into as what we do on Sundays is look at the 4 stages of price movement, man. And if you have my ebook, The Two Selves, I don't know why you wouldn't. It's the cost of a sandwich, $27, man. I'd think even you got $27. Get the ebook, especially if you want to try to be an influencer of any kind. Anybody on Instagram, could you pop over to YouTube and let me know you can hear me just fine? Because now I can't see my monitor. Or if you're on YouTube, give me a couple thumbs up. And I'll check in just a second. On page 8 of my book, The Two Selves, How to Be 10 Foot Tall and Bulletproof. I'd hope you want to be 10 foot tall and bulletproof. On page 8, I say it talks about chaos to cash. That's the title of my new book coming out. But I like that phrase, chaos to cash. Success is always organized chaos. The world and the universe are perfectly balanced. The planets never collide with each other. The roots and the trees are always just long enough to stabilize the trunk. The sun never gets too close to the earth. The rivers and streams always lead into the lakes or the sea. In other words, nature has a way of organizing things inside of the world of chaos. Fact is, nature has a very crafty survival system. System eliminates the weak from gaining too much power and authority. To protect itself, nature purges itself of anything that can't handle the pressure. Man, I've read that so many damn times. So Warren Buffett came out with his letter today, and he talked a little bit about that. And I'm guessing people can. Let me check over here. Let me know you can hear me. Sound is good, man. Back at it. All right, GP. Love every minute. Appreciate you. All right. So hopefully Instagram sound is working as well. What we see here, this is a picture of Ford. And right here is a picture of Wells Fargo. And these are just examples for church, man. And one of the things that I try to identify in what I spend a lot of my time thinking and research on is this movement of price, just watching price move through what we call the 4 stages of price movement. And what I'm looking at and what I'm thinking about is similar to kind of what Buffett wrote about is value. And in his letter today, he makes some good points, man. He's kind of talking the same thing, like the world is chaotic. And what he tries to do is, instead of being a stock picker, and that's what we're talking about today, is he tries to be an investor in business. So, and I've often said, in my opinion, it's easier to take an investor and help them become traders than it is to be... You throttled me again. Wow. Huh. Than it is to take a trader and make them an investor. Because the trader has the rabbit mind, man. Look at that. It throttled me again. That sucks. The trader has the rabbit mind, man. He's moving in and out. And I recently read with Vanguard. I recently read, it's either Vanguard or one of the big firms, that the average investor's portfolio turns over about every 3.5 years. Now, here's the funny thing. The average bull market lasts about 4 years, and the average bear market lasts about 18 months. So inside of every bear market, they begin to sell off their stocks. And so they never compound, they never grow their dividends. The problem with that strategy is you think, well, if I just step aside and then I'll get back in, is you got to be twice right. And almost nobody ever executes this correctly. So they never get back in, which is why most people never grow wealthy, is they can't stay the course, man. Well, I was hoping I just fixed my problem, and it looks like I did not. That blows. Give me just a second here. We may have to kill Instagram again. That sucks. If you're on Instagram, man, go to YouTube, and you can watch over there, because it looks like my internet provider is what's doing this. They're throttling me. They're slowing down the internet so much that I can't use stock charts. So I'm gonna kill Instagram and see if that's the case, but go on over to YouTube, man. Come on, man. There we go. I don't know what is up with that, man. So what we see is people trying to sidestep things, and it's usually come from the trader mind because traders want to move in and out, and that's why I try to get people to say, "Hey, man, you have to separate your buy and hold from your trading, and you got to be able to put on a different hat because as investors, the only thing that's going to make us money isn't sidestepping things; it's being invested when things are bad, so that we can compound with our dividends in lower prices." And so that we can add to our stuff at these lower prices. And let's put this on here. So this is Wells Fargo. Wells Fargo's been doing a really, did it not save it? A really nice price movement, as you see. And that's this right here. Price moving through the 4 stages of price movement. And all these are, man, all price movement is on these stages where you see, accumulation, markup, distribution, stage 4 decline. People call them different things, but really they're just moments of fear and greed, man. Stage one, it begins after a prolonged downtrend usually. So you'll see a period of time where it moves. Now, sometimes these things can happen quick. And a lot of times when I begin to share people the stages, they begin to try to anticipate the stages because they can't help the rabbit trader mind. And if it's a stage 3, they're like, "Oh, I got to get out because it's going to go down." And it's like, no, you've now moved from the money flow into the predictive model. And I want to be out of prediction as much as possible because I have no idea. I have no clue where the stock market's going to go. So I constantly got to remind myself of that. Just because something goes up doesn't mean it's got to come down. And what'll happen is if you get big winners, what people will begin to say, "Well, I'm cool with 10%. Well, why would you be cool with 10 and not 1,000? Like, don't settle for less if the market wants to give you more. And so by stepping out of the predictive model and into the reactive model and just letting happen what happens, and as we watch this flow through, especially as investors, if this is forward, which it is, look at what's happened here. This is what's crazy. This is like almost a year. And in almost a year, you had a chance to buy it down here, runs way up, comes back down, buy it down here, runs way up, comes back down, buy it down here. Well, this could go on for years and years. And if you read in Buffett's letter, man, if you read in there where he talks about buying Coke, he says in August of 1994, yes, 1994, Berkshire, he made it sound like that was a long time ago. Damn, I was 24 years old, man. I could have done this trade with him and I didn't. You understand that, right? There's people right now are 24. And then 20-something years from now, there'll be some dude going, "Well, I bought Uber or I bought whatever." You know what I'm saying? Starbucks, when it first started paying it, and then I bought it, and then I just never sold it, and I just bought more. And 24 years later, it pays me $20,000 a year, and there'll be tons of people who don't buy Starbucks. And every time Starbucks goes down, they get out of it because you see all this stuff. And I Googled it today and it was like all this shit about if a stock drops more than 10%, sell it. And it's just total nonsense. How many times you think since 1994 that Coca-Cola fell 30, 40, 50, or American Express or any of these others? And what Buffett did is he goes on to say that from time to time, one of the advantages, he says, of publicly traded companies is that periodically it becomes easy to buy pieces of wonderful businesses at discount prices. He says that's our advantage. Now, what I describe it as is this: stage 1, 2, 3, and 4. And so if I could find a way to value this, now I can utilize these stages to my advantage. And so every sell-off, I know eventually has a bottom, right? And so as I look at this, and right over here, it looks like it's selling off, right? And I know eventually it has a bottom. And some people might say, "Well, you can't buy bottoms." And I'd say, "I know, but I can buy all of them." Meaning if I have a way to determine what I think is a bottom, even if it's not, then if I execute systematically over a period of time, I am going to accumulate most of the bottoms, which sounds better than accumulating most of the tops. It just seems like a smarter idea. Like, what if you just bought tops? I mean, I guess you're still going up, but it's different than what if you bought bottoms, right? You can see the compound difference in this versus this, which they're both going up, man. Because over time, blue chip stocks tend to go up. Other stocks too, but I'm just narrowing this conversation into blue chip stocks, man. Now listen to this part. Berkshire completed its 7-year purchase of 400 million shares. Took him 7 years. How many people even own a stock 7 years? And you're like, what do you mean? Well, for 7 years, buying stage ones. Took me about 6-7 years before I stopped buying BX. Why? Because it just wasn't the value to me from where I first bought it. I thought I could get better prices. So if we come over here, take this back. So I started buying BX, I think it was in 2016, over here in the 20s. And I bought for 6-7 years, man. I eventually stopped here not a while back, and what am I buying? The stage ones. So his price would pull back. These are weeklies. Man, it just ran. You can see why I stopped. The stock just took off. And what he talks about in his letter, you'll see, is about every 5 years, he made one really good acquisition. And that most of them were just average and marginal. And then some are terrible and they just don't do well. And that's just part of the game, man. He's not overly fixated on those. Those are going to drift to the wayside as these others rise to the thing. And the worst thing to do is to keep selling it off, 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 so that when it gets up here, you don't have any left and it's just down to the size of the marginal positions. So you want to let these winners run, man. And it's inside of us. Let's say you bought a stock at $45. It runs up to 100. A lot of people are like, sell it. It's like, well, what if it goes to 300? And so it's like, rather than sell it, maybe you trim a little, which is what I try to do. And then that's it. I'm done. I want to let it run and then focus my new money at other opportunities, man. And I'm looking for stage ones, and not many because it takes time. Recently, it's pretty noisy out. Recently, I was acquiring CVS. Well, I've been in CVS, but I'm back to buying CVS. Why? Because CVS fundamentally is undervalued. So it's down about 25%, and it for good reason, because there's problems with the company. That's the only way you're going to get a stock on discounted. And Buffett talks about this in the letter that he buys two things: actual businesses that they own, physical businesses, and he makes the point is these rarely go on discount. You're rarely going to find a good business that someone's just going to sell at a fireside. In the stock market, it's every day because idiots own them and they can get out with the click of a mouse. And the moment there's a problem, they'll click it and they'll get out. And due to their fear, we can take advantage of that. So the passive public business investment opportunities available in the stock market are way exceed the possibility of buying a real business in the real world. Same with real estate. You don't wake up 2 days later, a house is 50% undervalued. It just doesn't work that way. But in the stock market, it's available all of the time. Where are we at? So as investors, there's never a situation where you buy a stock next week, you changed your mind. I get that all the time. Hey, are we still buying it? Yeah, for the rest of our fucking life. It's how you get rich, man. Now, that's not trading, and I'm not talking trading right now. Trading is price movement, using technical analysis. And yeah, you're going to have stops. But if you use stops in the world of investing, you're never going to accumulate anything, and you're never going to get anywhere. So that's why it's so important that you separate trading from investing. They are not the same thing. And I think I posted that in Discord earlier. Like, whenever you're down 7 to 9%, you should cut the position. That is so stupid. It really is horrific advice and then call that investing. Maybe it's trading. Imagine if Buffett followed that. My goodness. It's so dumb. It's hard to even repeat, man, but it's constantly repeated to people. In all these books, you'll see it. It's why I have a hard time even watching content of other investors and traders. It's because most of the shit they say is just stupid, man. It's not applicable. It doesn't apply decades and years going forward, man. And then most of them don't even have a decade of experience, so it's all in the moment, man. And you'll see a mix of the word investing mixed with trading, and you see it in real estate too, with flipping and wholesaling, which has nothing to do with real estate investing at all. Same we'll see in the stock market. That's why it's super important. Separate the two so you can approach the two differently. Beautiful pattern there. And often I'm asked, like, how do you value stock? The simplest way, and there's other ways. I like Morningstar. One reason I like Morningstar is you can actually read on the businesses and understand. And I do this a lot. I'm constantly reading. And one thing Buffett said in his letter, he understands business mess ups. Like, people are going to get it wrong. I understand that. Like, I'm not a CFO. I'm not a CEO. I don't know that I could have done any better. They're going to make mistakes, and a lot of times we react as if like, oh, look at these idiots. Like, dude, really, you could manage a Fortune 500 company? And so that's okay. Like, say Hanes Brands, Intel, that shit happens. Business stuff happens. You can misstep it. You can get it wrong. That's not a reason necessarily to sell them, because they're going to fix it. Okay. A reason to sell is when they lie, or when they have, personal misconduct of theft or stealing. That is unforgivable. But just messing up or getting the business cycle wrong is not. It's usually an opportunity for you as a business owner, if you see it that way. And he makes that point clear. It's like, we see it as, we're not stock pickers. In trading, we're stock pickers. In investing, we own businesses. And so if you remember that video that I posted in Discord here a while back, about managing a portfolio, what I'm constantly doing is scanning the portfolio against the 11 sectors of the S&P 500 and saying, okay, where do I need more? Like retail, what's the position size of my retail? Where's oil? Where am I at in telecom? Where am I at in industrial stocks like 3M and Dow and DuPont? Where am I at? And maybe I don't have the best stock in that sector, okay? But I've been with this stock for a while, because having, quote, the best changes. About every 2-3 years, you're going to rotate. Exxon may be winning, then next year it's Chevron, then it's Conoco. Like, they're going to rotate. So I'm not necessarily concerned about that, as applying new money, income that I make, profits, margins, dividends, interest, rent. Where's the best place for me to apply that inside of the portfolio of businesses, houses, and things that I own? And that's what he's saying. His job is to manage the money that he makes. And for you, it may be a job, and then you own stocks, right? And it could, your house is real estate, but you need to look at it the same way. You are the CEO of you, and you are the risk manager of you. And if you saw in the letter, Buffett talked about the CEOs need to be the risk manager. You don't outsource that, man, which means it's no one else's fault, is what he's trying to say. So as I watch price movement, I've read it 10 times now, Buffett's letter. Some people casually read through it like you know it. You don't know shit. Go back and read it, reread it, read it again. If you thought you read it once and you got it, you're delusional. There's a lot of little things in there, man. Go read them. Go read the one from 1972 and then the one from 84, and then just reread them, man. And what you're going to see is consistency, man. And then look at your own self. Are you consistent? Are you doing the same thing from 3 years ago to today? Most people are not, man. They change with the whims. Also notice he said he had stocks go to zero. I've had stocks go to zero. Okay. Does that mean the money flow sucks? No. It just means I've got a bad stock, man. And if the richest man in the world has them go to, like, who are we to think we're not? That's just part of the game, man. Yeah, if you're always expecting good stocks, they go, you're delusional. It's not going to happen that way. Um, as we watch these four stages, let's get a better chart here. Wells Fargo. What was cool about that, in my opinion, is he's letting you know, like, mistakes happen. You're going to get some shit wrong, you know. And here's the thing: Buffett doesn't even post crying emojis. He doesn't do that. You never hear him say, "Oh, the stock's killing me." No, he didn't do that either. They just go the wayside, and then the ones that are doing great make up for it, and then he puts new money to work in what he thinks is the best place. In other words, he just keeps moving forward, straight line. Keep doing the same thing you were doing, man. As I watch price movement with that idea in mind, and one of the things I'm constantly scanning against what I believe to be value, I'm looking to buy, for me, and you can have different strategies, but I'm looking to buy things that are undervalued. So I'm looking to buy real estate that's undervalued. Once it's fair value or more, I'm out. And if there's nothing to buy, there's nothing to buy. You know? And so if I can't find a deal in my area, then I'm going to turn my money to where I can. And that might be like Buffett, either buying a business, which in my case is buying a property that I fully own, get to own the equity, get to own the cash flow, right? Well, if there's none available, then I'm going to buy a shit ton of stocks that are available, that are undervalued, that do produce. So it's every day, what's the best option? If real estate prices start coming down, I might hold up on my stock purchases, turn to picking up properties. But what you're going to notice with average folks, make sure we're still on here, average folks, here's where you get caught up. They got you in a 401k. Nothing against it. And they got people on systematic adding. It's like, okay, that's cool. I like that. But then those people can't buy properties when they're available because all their funds and all their money's tied up into a system that they have no control over. And so it gets really hard for them to multiply and compound like you see some of the richest people in the world do not have these things. They're not in SEP accounts and IRAs and 401ks like we are. They're just in shit tons of money, you know, and nothing wrong with those things. But sometimes we can get so locked into them that then we can't execute and do other things that we might have direct control over. A lot of times when I do one-on-ones with people and I say, hey, break down your 401k for me, what's it in? No one has ever just told me because they don't know. They don't know. You know, think on that, man. That's terrible. Like, you got to know exactly what it's in, and does it even make sense? Just because they're doing it at work doesn't mean it makes sense. The other thing that's unfortunate is it doesn't let you you can't do any of this, man. It's unfortunate. Now, if you're self-employed, you can, and you do get to ride these waves, man. I think Buffett even says it in the letter. Where does he say this? One advantage of our publicly traded segment is that it becomes easy to buy pieces of wonderful businesses at wonderful prices. It's crucial to understand that stocks often trade at truly foolish prices, both high and low. Efficient markets exist only in textbooks. In truth, marketable stocks and bonds are baffling. Their behavior is usually understandably only in retrospect. So sometimes I'll have new like, oh, the market's rigged, or this is manipulated, or it doesn't make any sense. And it's like, no, you're thinking it's some shit you're supposed to be able to make sense of. Stop thinking like that. It doesn't. Another point that he points out, that's a rabbit hole that I see a lot of people going down, is the debt. Where is it at? And I was glad that he said this because it's exactly what I say. See if I can find it. Oh, during the decade of 2021, the United States Treasury received $32 trillion in taxes while it spent $43 trillion. It means it's going in the hole, negative. Though economists, politicians, and many other of the public have opinions about the consequences of that huge imbalance, Charlie and I plead ignorance. Oh, but there's a lot of YouTubers who think they know. Two of the richest guys in America from investing don't plead ignorance. And yet there's all these YouTubers that think they know. and firmly believe that our near-term economic market forecasts are worse than useless. So basically, all those YouTubers are completely fucking useless that you watch. Meaning he doesn't watch them, guys. How does he get through the day without listening to Ray Dalio? How does he do it if he can't go to Reddit? How does he even make it, guys? Our job is to manage Bookshire's operations and finances in a manner that will achieve acceptable results over time and that will preserve the company's unmatched staying power within the financial panics. Staying power and panics. This is literally the opposite of most of the people I talk to. They do not talk like this. Or severe worldwide recessions occur. What did he say? Staying power. So when these things happen, we have staying power. Berkshire also offers some modest protection. Gets into other stuff, but you see the difference in the way he speaks, man. A lot of my followers don't talk like that. In identifying stages, one of the things I'm looking for is for something to be undervalued. Now, if I'm trading, I don't really too much care about the value. If you're trading, you're trying to catch price movement, I'm not really too much worried about it being undervalued. I mean, it's not at the highest of my concerns. As an investor, it's top of the concern. Is this thing valuable? I want some built-in equity. So if you saw my video yesterday when I was talking about buying a house, if the house is in a neighborhood of 175, I don't want to pay 175. I want to pay 150. If it's a $200,000 neighborhood, at the least, I want to pay 175. Why? Because I need that 25% discount. That gives me a margin of error as well. And let's say I'm wrong and it goes down further. Well, it's already undervalued and it's already gone down. It probably lessens how much further down it goes. Same in real estate. And so to me, they're one and the same. The way I approach a stock is exactly the way I approach real estate. I need it undervalued. I need to have some way of valuing it. I need to know the sector, i.e. the neighborhood. These are one and the same. So sometimes I'll meet real estate guys that don't understand stocks. And it's like, you completely understand it, bro. You won't open your mind to it. You know, everybody understands it. Everybody knows stocks. I'm drinking coffee. That's a stock. We're all inside stocks. What we may not have is skills of technical analysis or how to value something, but we all understand them. And so as I watch price move, I'm anticipating this right here, that it's going to move sideways, it's going to roll up, it's going to go sideways. It's either then going to break out and roll up or break out and roll down. And then it'll stop and go sideways and it'll break out and go up or it'll break out and go down. I don't know what it's going to do there. But as I watch it based on value, and then I can begin to use my skills of technical analysis to see. And sometimes I see a lot of people, what about this indicator? And what about it's all nonsense, man. In my opinion, once you understand the 4 stages of price movement and support and resistance, prices tend to stop where they start before. Nothing else is going to add any value to what you're doing. There is no magic. There's no one indicator that knows all. None of that. Candlestick patterns in and of themselves aren't anything. Moving averages in and of themselves mean nothing. When we can layer a few of these things over each other, but at the end of the day, it still comes down to price. Still comes down to price. And even with moving averages, all these are doing is trying to help me see the price pattern. But if we were to remove them, we should still be able to see the 4 stages of price movement. So if you've ever taken my course on getting started with stock charts, sometimes people think that's a beginning course or it's about stock charts, the program. It's not. It's about stocks. So we should be able to see, we shouldn't even need moving averages. Like you should be able to look at that. You can remove this, remove that. I can kind of tell where the RSI, I could probably tell you where it's going to break out above the 20. You know, I'm going to say probably right in here. Let's see, probably right here. When it broke down the 20, probably right here. Let's see, bank above, probably right here. Definitely broke out here. This one gets a little chunky. So then let's save that. Now I often get people, well, why is about the book being in color? And it's like, dude, You don't need it in color. You need to learn what the hell you're looking at. That's what you need to learn. You can tell. It don't matter the color, man. Pretty close. Woo! Ho ho! Look at that. I don't need no stupid moving average, man. People need moving averages because you don't look at enough charts, man. I don't need them. You could just give me a chart and I'll show you where the RSI went extreme. I mean, dude, I don't even notice this shit most of the time. You can see it, man. You can see it in price movement. I bet if you gave me a chart, I could draw it out and be pretty damn accurate on all of these. Where the MACD first started to tick over. Now, how do you do that? You look at a lot of damn charts, man. You look at a lot of charts and you plot it. It's pretty close, huh? Missed this one right here, though. Pretty close, man. So you need to be able to do that, bro. You need to be able that you don't need you really don't need the moving averages. You know, I put them on there, but after a while, you really don't even need them. So when you start thinking like I need another indicator or no, man, you need to look deeper in yourself and spend some more times with charts. You don't need stochastics. You don't need Fibonacci ratios. It's very simple. Support, resistance, which is supply and demand, and price, you know, the way price moves. It doesn't keep going straight up and it doesn't keep going straight down, right? So, but we could have all those on there, but this is way price moves. Sideways up, sideways down, sideways. That's it. You know, and if we know value, and they say they think Wells Fargo's fair value is $58, okay, where is it at now? 46. Huh? Means it could go higher. Yeah, it could. Do I want to buy it here? No, because it's probably headed down, right? Maybe it holds, maybe it keeps breaking out and runs up. But that's not a spot I want to buy. I'm wanting to buy what? Lower, not when it runs up and higher. Now, as a trader, maybe I could play inside of that game, right? And if we dropped it down, if we're playing the fractal game, we could drop it down to a 15-minute and maybe we're catching a breakout. But I wouldn't bother with that stock. But so what it does do for me with the 20 gives you that visual representation that here, let's put it back on the one cool thing about stock charts. If you do it over here, it'll keep these of what you played with. If you go back to the center, it'll take you back to your settings that you have saved, which you can save them over here. I go through all that in my course. This I would trade. I would not buy this at all for an investment. Didn't come down enough, and I wouldn't trust it. So as a trader, I would have a stop on that because I'm trading, right? Part of trading is to preserve liquidity. So I would have a stop probably right around in here, and my first target be right around in here. So the money flow, if you see as quote trading, gives me an entry, an exit. I got two exits, one down here and one up here, right? And so as a trader, I can make that assessment. Now, what I don't like personally is it didn't come down that much. I don't like that. So those trades, you know, I would keep a tight stop on that because I just don't anticipate that working. And as we dig into the 4 stages of price movement, you know, for me, that'd be tradable. I would never add to a buy and hold on that. I might trade that, but I wouldn't add to it. It didn't come down enough. So I'm only looking to add when that RSI gets extreme and the stock is undervalued. And that's such a simple concept. You know, Buffett talking about it took him 7 years to finish adding to, and someone in Discord posted when Buffett was adding to Oxy, and you know he's timing the ads, and then he talks about in there about share buybacks. As long as they're buying them at a good price, it's good for the company. Well, you run your own company. You're the CEO. You're the CEO of you. Share buybacks is like you buying your own shares. It's only a bad thing when you're paying too much for them. But if you're buying them cheap, or based on some way of determining if they're cheap, then it's being smart. And on this one, look, Buying those bottoms was a smart idea, man. And look, if our criteria is the RSI needs to hit extreme, I mean, we're doing pretty good. That's perfect. It's not reading the future. It doesn't mean I know where anything's going, but for all I know, it goes lower. And it's like, all right, cool. I'll do the same thing. I'll let it come down. I'll let it start going sideways. I need my 4 days. And if the RSI is extreme, I'll start buying again, just like Buffett does. He's buying over, and I might do this for 5, 6, 7 years, And then if it starts to run and gets overvalued, I stop and I just leave it be and I turn my attention to something else and keep watching my portfolio. And you do this, and it's boring. It's super boring. That's why you'll see people drift into the money flow and drift out of the money flow. It's super boring. They can't ride the ups and downs. Same reason your parents didn't buy Coca-Cola in 1994 when the most famous trader in the world was on CNBC, the financial papers of the day saying he was buying it. It wasn't a secret, guys, but your parents didn't do it. I didn't do it. I was 24 years old in the Army. I could have followed that whole thing, and I didn't, man. I didn't know. No one told me. No one grabbed me and said, hey, stupid, why don't you do this? I wish they would have. Just like that. I wish they'd have said, hey, dummy, stop wasting all your money. Go buy some Coca-Cola. It's not that complicated. And I should have done that, and I didn't do it, man. What a nice flow, huh? So as I'm watching this, constantly engaging it against the value of the company. Let's look at another one real quick. Look at Campbell's. It's one I've been in for a bit. It's one of the first stocks I started talking about was Campbell's and Starbucks because I thought they were both ridiculously cheap. And I bought Campbell's for 4 years. 4 years I've been buying it. And I stopped when it got over 40 something dollars. Let's back it up. Over 45, I believe. Man, look at this. Here's Campbell's in 2014. It's $32. And it runs for basically a double, almost a double, to then come back to here. Now, this is years of dividends. Look at that. Years of dividends. I mean, just you're getting 4 a year, right? Look at all these free shares, man. To come all the way back down. Now, how many people you think would be crying, oh, it's the same price that I paid for in 2014 and blah, blah, blah. Then just to watch it go up again. A lot of people will get out. Oh, I knew I should have sold it up here. Okay. Or you could spend a decade building a shit ton in it and make your dividend gigantic, right? That's the option that you have, man. But people get tricky, man. This is how could you know about Campbell's? That's a secret stock. All the people eating it all the way down. They're buying the food, going to look at it, man. Beautiful. Wow. Now, I didn't start buying till down in here. 2018, 19. Because why? It was dirt cheap, man. They were having a lot of problems. The stock had come way back. It came back to 2014 prices. That's what caught my attention. And I'm sure if you had it in 2014, you weren't very happy. This guy's not happy. I'm happy. And then look with the run. And what was the difference? It's the same stock. The only difference was he was looking at it from the past of what it did before. And that can affect your opinion of the stock. Oh, I don't like Roku. Why? Because it came down. You didn't have that much. So it's giving you years to accumulate. Look at Uber. So I've been accumulating Uber for years now. Back this up. What are we going to do? Sell it because it goes down? Should we have sold it over here at $15? I mean, how many times have I gotten a chance to buy it this cheap, man? This is beautiful. Where's our goal? $60. Does it even matter? It took Buffett 7 years to buy Coca-Cola, man. What if it takes me 7 years to get 5,000 shares of Uber and then I get my run to $60, man? So the time, I say this a lot, God's time's not your time, man. And when it was going to do it is not when you were thinking it was going to do it. And the last thing you want to happen is you buy some shit and it just takes off. Dude, that's terrible because you don't have enough money. You don't own enough shares. We've seen this recently with Bitcoin. You didn't have enough Bitcoin. I don't know fucking anyone that had enough Bitcoin to even worry about the sell-off. They needed to accumulate more Bitcoin. I only knew a couple people that had $1 million or more of Bitcoin, One of them was Chris, and you saw what he was doing, buying Bitcoin. Nobody wants to talk about it now. Me and him were texting each other back and forth because he was like, you see this stage one? I'm like, yep. Why? We're buying it. Well, buying this one too. I'm going to buy all of them from here on out till fucking either I die or it goes to $1 million. I'm going to buy all the stage ones. And especially now that nobody likes it, that makes me like it even more. Took Buffett 7 years to accumulate Coca-Cola. You got kids that own Bitcoin less than a year, dumped out of it. They ain't going to put 7 years. It took me 7 years, 8.2 to become a millionaire in real estate because I had to keep accumulating properties, man. Over and over and over. And I'm not making any money. I'm putting all the money back into the deal, man. There's no money being made, guys. When you buy one, all your money's going into it. And then number 2 and 3 and 4 and 5 and 6, 7, your money's going in. Nothing's coming out, man. People think it's some sort of where you're going to be rolling in cash flow. And it's like, no, that's all going back in for at least 7 years. It takes 7 years to even accumulate a position size that's even going to benefit you, man. Easily 7 years. I was really glad that he wrote that. Let's see. We're still going here, huh? All right. So think on that, man. We get to use this to our advantage. That's what learning about the 4 stages of price movement is. I would encourage you to think less about stocks and more about the stages, and to think more about building larger positions than adding more and more and more and more stocks. Now, I have a lot of stocks because I've been doing it 21 years. And you're going to need to get going, you need a portfolio. So you're going to have to get some. But don't be in a constant state of adding new. And in the beginning, it'd be a little different. But if you ever look at my buy and hold, I only add 1, maybe 2 a year. And a lot of times when I add, I'm just adding at pairs. Like I've been buying AT&T for like 13 years. Well, when they went on sale, Verizon happened to be a better deal. Cool. Let's buy some of that. We buy a little bit, and I'm going to build it up over the years. Now that I own both, from time to time, one will do better than the other. Well, I could set the dividends to go to cash. I could push them both into the one that's doing the worst, or the one that offers the best opportunity at the time. And that's how I ended up with Exxon, Chevron, and Conoco. I didn't buy all 3 in the beginning, just over the years and over the time. I may feel like I have enough Exxon. It goes on, we get a big hit. Cool. I want to add to that sector. I want to own for me. And you don't have to do that. You could just have one. I don't trust my stock picking abilities. So I spread it out. I want to own 3 or 4 oil stocks. I want to own 2 or 3 telecoms. I want to own Kraft and Campbell's and Kellogg's and, over time. I want to accumulate them. Because right now, if you look, what is Campbell's worth? Oh, hold on. It's trading at 3% discount. Well, that ain't very much, man. That means this shit's basically a fair value or overvalued. Well, I own Kraft. I started buying Kraft when it was really cheap, like 50% undervalued. It's trading at a 24% discount. So if I come over to the charts, man, and I'm like, okay, let's look at Campbell's. Campbell's breaking out. Well, I could trade this. That's a perfect money flow pattern, right? So because I own it and I know the stock very well, this is a tradable stock, man. I ain't got to go looking for trades and, who's got a good trade. I don't need all that. I can buy this, man. This is set up. Here's a trade. You could trade that, use options, whatever you want to do. You could trade this, right? But I don't want to invest in it right here. It's not undervalued. But if I come over and look at Kraft, KHC, it's set up too. Could trade it, but I might want to buy some in my buy and hold. But to be honest, it's not extreme, is it? So you notice I haven't been buying it. It's not extreme, man. Back here in October, we bought some. Extremely undervalued. Once that RSI goes extreme, it's got my attention. Then I go look and see. Also, general thing, when things are below this 200-day moving average, as a general rule, almost every time you go look, you'll see they're undervalued. It's almost like you really, if you're broke and can't afford a value subscription, you'd be pretty damn close just looking at that yellow line, especially when it comes to like commodities, oil, crypto. When it goes below the yellow 200-day moving, most institutions, hedge funds, private funds, endowments, private money managers, mutual fund will probably, they all pretty much, when things go under that 200-day moving average, they see it as in a bear market, and it's usually cheap. It's only going to go down so far, especially if it has intrinsic value. It's an actual business and it's producing dividends, which we call the bread and butter trades. It becomes even more attractive. Now, if you remember, I wasn't buying any 3M. It just, in my opinion over here, it wasn't undervalued. But back down here, different conversation. So you see how it ran up and caught that. Well, let's look at 3M. What do they think it's worth? Good company. Now it's a different conversation. Why? It's undervalued. 19%. We're getting in that range, right? And if I want to buy a house in a $200,000 neighborhood, I'm not paying $200,000. I want to pay like $175,000. So now we're coming into that zone, and it's close, 19, 20%. Now we're back in that zone again. So patience, right? Remember what I said, the RSI makes me interested, man. We're almost there. Would I buy here? Nope. Why? It's not a bottom yet. There's no bottom yet. What am I looking for? Pivot point. I mean, I need it to stop. And then how do you know it's the bottom? Well, the next day doesn't go any lower. So we could start today. We could say, okay, there's my pivot point. But I need this to confirm. So are we below the 200? Yep. Are we undervalued? Yep. Is the RSI extreme? Not quite yet. Where's the MACD? The histogram says it's to the downside. Look at that. Pressure's still to the downside. Look, downside. So what does this mean? I'm just going to watch it. So maybe by Friday this week, this could set up for me. And I'm hoping it comes down into here. Now, here's the thing. I'm underwater in 3M. Shit, man, I bought it way back up here. Why? They downgraded it, and the fair value kept coming down and down, so it's going down. Well, I got 7-8 years, man, right? Over 7 to 8 years, I'm going to build this up. Fuck, man, we might get lucky, and this thing comes into about the $80 range. Now, that's going to bother the guy over here, right? He's going to be like, oh, man, this stock sucks. And it's like, does it? You don't want 7 years to be able to accumulate it? So that's that game. This game gets so easy. Like, investing in stocks is easy. Like, anybody thinks that's just complicated. It's just, they're just lazy or just don't have an interest in stocks. I mean, because it's not complicated. Once you understand how to value stuff, right? Once you understand how to value it, and once you understand a process in which you can buy and enter a stock, and once you understand you actually don't know where it's going, and once you understand that economic forecast is fucking useless, and once you understand that no one else knows, and once you understand that everyone claiming to know is completely full of shit, once you get all of that, you're free. And now you can turn chaos into cash in that you can outweight people. You're self-sustaining. You can just read on your own. You can look at values, and you can understand that it's a business and that you're not in the game of stock picking. You're in the game of building a portfolio of passive businesses that either appreciate or produce cash flow, which means they spin off dividends. Where's it at here? This is last week's. I'll be updating it today. And that's what my chart is about. I'm not going to execute on all of these. And I leave off a lot of things that I have going on. What I'm showing is the ones that I think are setting up. Lyft. Doesn't mean I'm buying Lyft. I still need it to put in a bottom. Okay? So I'm following the money flow. A lot of people that follow me say, oh, I'm buying Lyft. I'm buying Lyft. You're buying it too soon, guys. In my opinion, in the way that I trade. It's not even gotten above the 5-day moving average. So I don't want to buy this. Why? Because I want money going into shit that looks like it's going up. UAN. Look at this. I needed my money this week to buy this. The dividend is $10.50 for every share. It means on my 100 shares, they're going to pay me $1,050. I'll take that $1,050 and buy Lyft. You get what I'm saying? That's what so every day I'm a custodian. Listen to what Buffett said, man. Where's it at? I'm telling you, I model my business after his. I don't own insurance companies that produce monthly payments. I own rental properties that produce monthly payments. See, I can't afford to buy an insurance company, but I can afford to buy a house that produces monthly payments. Let's see. Charlie Munger, my longtime partner, and I have the job of managing the savings of a great number of individuals. We are grateful for their enduring trust, a relationship that often spans much of their entire adulthood. It is to those dedicated savers that are at the forefront of my mind as I write this letter. And he goes on talking that it's his job to take the money from the businesses, or i.e. your job, or in my case, real estate, or book sales, or course sale, whatever I'm doing to generate money, capital, right? I want to allocate that into things that I think are going to make us the most money going forward. So I use this pattern to help me do that. And what it does, it doesn't mean I'm going to get every play right. It doesn't. Like he even says that. It just gives me a systematic way. So I don't want to put money in things that aren't set up yet. I want to catch things going up. So if instead of buying that, I'm putting money into here, new money, right? There's my breakout. And notice what happens before it breaks out. Look at those moving averages. Even here, and it wasn't the breakout. It started to, but then it came back down, right? See that sideways? Look over here. See that sideways? If we look at Lyft, do we see it? You see any sideways? No, not yet. You had to jump down. And remember, if you got to take my course on this. Anytime you get a move like that, where they're that spread apart, where they're that broken, it takes a while. So I know I got time. I had some followers buy call options. You're going to catch that little bump. To me, it's why. It's going to come right back down. This will take a while. It'll float right around in here. You'll start to see it. But until these moving averages come together, there's no rush here, guys. No rush at all, man. What was on that list as well? What was it? Pens. I think it was Friday I started buying pens, or Thursday. Look at it. Not Monday. Why? Finally went sideways, and it's breaking above the 5-day moving average. Tried here. I wasn't ready yet. Now it's breaking. So this could be a trade too, right? 25. Is Pinterest undervalued? Let's see. Yeah, 30% discount. 30% discount. Cool. I want to pick some up. It's set up. In my opinion, Lyft is not yet. It will be. But I'm just patient like that because I need to allocate money to things I think are ready to go or in my opinion, is a better move at the moment based on this or on this. So it might be weeks and weeks on Lyft. Well, in the meantime, we could catch a couple trades, man. Like look at UNG. Oh, look at this. It's on the move. Now, if we're trading, let's say we're trading, this probably happened. This happens to everyone. We tried to buy it here, it came down, tried to buy it over here, it came down. Or no, we tried to buy it here, it came down. You're like, oh, three times I'm out. I'm not doing that anymore. It's like, no, because all you need is one for it to run. If this thing was to run and get back up into here, these don't even matter, man. So when you're trading something, stay with it, trade it. Okay. Same with oil. We've had couple bust outs in oil, but a couple trades back, it was a 100% run back over here, 100% run. So, and it's setting up again. So on my new board, you're going to see oil setting up. I don't want to invest in it. I don't want to invest in any oil stocks, Exxon, Chevron, Conoco, Oxy, in my opinion, they're all overvalued. And I don't have any reason to believe they're overvalued. I'll trade it now because I own it and I follow it closely, so I can use my skills as an investor, following it, repeating a simple process, understanding the money flow, understanding value. Instead of investing, I'm going to turn to trading it, try to generate some money, right? Or, same with like in house flipping. The purpose of it is just to generate money to buy more houses. If I'm trading, I just want to generate cash so I can take that money to what? Buy more things or to invest it. We got Bitcoin setting up here. It's technically still in a downtrend. I've called an audible this weekend and I've been buying crypto. Bought yesterday and today. I think this level holds. Maybe not. Price is holding while the MACD is still pressuring down. We'll see. Could be wrong. It's all right. Next level of support's pretty tight, right around in here. If that breaks, obviously we come all the way back down in 19 or 17. Yeah, we'll see. I've been buying. I called an audible on that. Look at Ford. It's weird. I can't. Let me try it again, man. Yeah, he says, my friend doesn't buy dividend stocks because he doesn't want to pay taxes. I get that a lot. That's such a weird thing, man. Of course, he could put them in tax sheltered Roths, IRAs, SEP IRAs, if he just wanted to. I don't know how you would live. They're going to tax your job. They're going to tax everything. You want to do the best you can to, pay an unnecessary taxes, or if you can obviously figure out the tax system and find, ways to shelter taxes. Dividend stocks, obviously you can shelter them if you have them in a Roth, and anybody can have an IRA. You don't even have to have a job. As far as Roth versus regular, personal decision. Mine are all regular. I've made too much money to have a Roth. You could backdoor it, I guess. I don't know. They're growing tax free. I don't have to touch it till I'm like 72, 74. Obviously, I can at 59 and a half. A lot of my money's tax sheltered through real estate. So, I don't know. The richest guys I know have their money in just brokerage accounts. I don't think Elon Musk has a Roth, So, if they're there, I would use them. You definitely don't need one, especially if you're going to use the money in the future. Maybe you want to start a business, maybe you want to buy an apartment building, maybe, things like that. I would rather pull that out of stocks than take a loan. I would never take a loan to start a business. I think that's a horrific idea because the odds are totally against you. The chances of your success are pretty slim. Chances are your restaurant's going to go out of business, your whatever. I had a lady I was coaching a while back, and I was like, please don't do this. She was going to borrow $50,000 to get a food truck going. And I'm like, man, go sell it out of the trunk of your car and prove that you can do this. She borrowed it, got an SBA loan, went out of business. Now she's on the hook for $50,000 plus all the other money she lost. It's like, I knew that was going to happen because it happens to almost everyone. Starting a business is not easy, man. That's why I don't try to do anything for a living. I try to do a lot of things, but no one thing for a living. Like the last thing I'd want to do is trade for a living. That sounds fucking horrible. The last thing I'd want to do is invest in real estate for a living. That sounds terrible. Takes all the joy out of it, and you're depend on your decision making, and you have to be right or you don't eat, and that sounds like an awful idea. So I'd prefer to depend on none of them and make money in all of them. Does that make sense? That's the way I look at it. And for the longest time, I had a job that I eventually went part-time. I'd work 20 hours a week at a job while taking classes, doing things, while running a lawn care business, while doing various things on the internet, while trading stocks, while buying real estate, while being a dad, while trying to write books. Like, you just got to control your time, man. You don't want to do any one thing for a living. What's up, Michael? I hope you're doing well, bro. Um, yeah, man, I feel good. I got to figure out this Instagram thing, why I can't seem to go live on both. I'm guessing it's got to be my internet provider. For whatever reason, they must be just slowing me down, and that's causing the problem with stock charts. Hope that helps. I did a podcast yesterday. I did one the other day with, you might enjoy it. In the beginning, we're kind of crying about our problems, but you might find that fascinating too. Me and the professor, we get into some good stuff on that. Been bringing on guests as much as I can on here. In the newsletter, that's the one with me and the professor. If you see the MFG logo, those are just me. If you see a picture, that's someone that I've interviewed. There's me and Chris Johnson, my buddy Welby. This one, although a lot of people didn't listen, I wish they would have. This guy's now back in prison. Bonanno crime family soldier Gene Borello. If you go to YouTube, he's been re-arrested and put back in jail. That was an interesting talk. I was trying to have some more mafia guys on. They're hard to get. I got a guy from Outlaw Motorcycle Gang I was trying to get on, but they're hard to get them to do it. They're not used to publicly talking about their things. This one with me and the professor gets good. It's a little long. I liked it though. Toward the end, he's a good dude. This is me reading Buffett's letter, a little bit of commentary from me. Really just trying to encourage people to read the letter. Anyway, those are always, you can get to them from the newsletter or through links on my thing. Science of Getting Rich, I'm going to have a new one, hopefully up today on chapter 3. We've been working through it. I know I'm a little behind. Mardi Gras got me a little behind. So we started the series. You can catch up pretty quick. There's the introduction to the series. We started with the last chapter. We went to chapter 1, 2. Hopefully I'm going to get 3 out today. And we're working through the whole book. My favorite book. Love the book. I think it's a great book. You can get it free online or buy it on Amazon. So a lot of content there. I put out a lot. I know. Different ways for people to take it in. Try to get the newsletter updated today. And the whiteboard is always in the back. Make sure you do your own too. Top 9 crypto coins. These change based on my ads and things. I'm not going to keep texting those. It doesn't seem to be much of an interest. So, but I am posting them in Discord when I do some buys. I've been posting, the dividends that I'm getting this week, just the number and then what they're in. I don't know why I had UAN up here. I put the wrong stock. UAN's dividends paid on 3/3, or the ex-dividend days 3/3. So I don't know why I had that. I was a mistype. And this is my board, what I'm looking at. And I'll have today's up today, sometime today. So a lot of these charts, I don't necessarily update them unless something's really changed. Just saves me time. And I'm only putting the ones that, for whatever reason, are just on my mind. Trade logs on page 4. You should have your own trade log. You should be tracking what you're doing. I would encourage you to do that in some way or fashion. So you can go back and look. And then over here, market status, at least once a week, I try to go in and update it. And whatever, we still got a few of these MFG hats. I had to order another one because I messed up one. Yeah, man, that's it. If you're into dividend stocks, if you come over here and click looking, you'll see various links for this. If you're oh, I got that one set wrong. This Sure Dividend, this guy's fixing to come on my podcast. He's a buddy of mine, lives in Houston, does an excellent job. They track 600 securities, trying to rank what they believe are the top 10. I just like the content and read it. I don't necessarily buy their top 10, but I'm always reading and studying, trying to stay in the dividend game. He'll let you test it for a week. If you sign up, I get a few bucks, but I don't only promote things that I personally use and personally like. So that's why you won't see me promoting any brokers, any crypto coins, that are not big coins. I don't promote shit for money. I just promote shit that I use. You open an IRA for kids without income. No, children can't. Once they're 18, they can. A child can have an IRA once they start earning income. But no, you can't have one for a child. I don't know that I would do that, man. I get the idea that you want to start saving early, but sometimes the way people do it, they lock themselves in. Meaning, like, you put all that money into an IRA and your kid wants to, say, go into real estate or start a business. He doesn't have the money to do that. And there's plenty of time for them to play catch up. Nothing wrong with saving money for your kids. It's a good idea. I think people just kind of overthink it at times. First off, your kid might be an asshole. You might get to the end and your kid is just Jeffrey Dahmer. Hopefully not. But it's possible. And your kid, the last thing your kid may need is a bunch of money. Like, that could be the worst thing for them. And you got to understand, when you do that, it's their money. Like, you can't get it back and you can't take it out. Even like an UTMA. I used the UTMA. If you use the UTMA, remember it's either 18 or 21. It's their money. Like, you can't keep it. You'd be breaking the law if you took it out. So remember that. They can get control of that account. I'm not a big fan of these college programs where you set it aside for college, because you can put it in something else that's not designated for college and still pay for college. So, you could also just leave it in your name and write checks, man. So my point is, don't assume your kids are going to be smart or do the right things. Keep that in mind, and I might not tell them where their account is. I don't know. Everybody's got to make that call, but remember, once you do it in their name, it's in their name. Once you do it in a college thing, it's in a college thing. So you could just set up a whole separate account in your name and allocate it to them, or do an UTMA and just don't necessarily tell them where it's at. And then as they get older and they seem reasonable, you could tell them. It does sadden me that a lot of people leave out real estate out of education of children. And if early on you taught your children how mortgages work, how properties work, understanding value, understanding buying things when they're undervalued, and your child could probably get exponentially richer than you faster than you do, but as a society, we teach our children to go to college and get a good job, and then once they're making money and they've taken on all this debt and everything's fucked up around 30, 32, here's some ways to get wealthy. And it's like, well, we could have just started with that at 16. There's no reason a 16-year-old can't learn how to buy an apartment building. Just because you're scared doesn't mean your children have to be scared. Just because you're scared to pull the trigger on a property, an 18-year-old's not necessarily scared. So don't let your fears hold your children back, man. Like, teach your kids how to buy properties, man. Teach them how to be owners of businesses. Get what I'm saying? Like, don't let your fears, don't let the fact that you can't pull the trigger hold them back, man, which I see a lot of people doing. A lot of people, they got plenty of money to do it, and they're like, oh, I don't know. And they can't do it, man. So yeah, man, careful of that, man. Get them in there, man. Drag their ass to, you know. Stocks is different. If you don't have an interest in stocks, you can't beat it into people. And sometimes when I do one-on-ones, it's usually men though, trying to get their girls interested in the stock market. Don't do that. If she ain't interested, she ain't interested. And you babbling about it all day is not going to help. Find an outlet for that. Or if you have a boyfriend who's not into stocks, you can't make them. Just do it. You do what you do. And same with kids. I mean, if they have an interest, but beating them over the head with it may or may not work. Well, in my experience, they catch more than you think, like just listening in on you. So if you're just talking about it daily life, if every day you're up watching Fox Business and not the regular news, if you're looking at charts, if you're living example of a person who owns assets, who, oh, I got to go check up on this, and we own this, and it's just casual conversation in your house. It's going to be just natural what they do. But if you sit around telling your kids not to smoke, they tend to want to go smoke. You know what I mean? So just let them see in your life, I used to show them all the time, look at this dividend, man. $180. I didn't do shit. I used to show my kid all the time. And he'd be like, well, damn, I want to get $180 for doing nothing. I bet you do. You better save some money then. And I would just do that, man. You drop that on people. That works, dude. I brought a lot of people to the stock market by just showing them dividend payments. But some people get into it, man. Some people get into it young. If they do, that's cool. Hey, I won't hold you guys, man. Appreciate you this Sunday service. Sorry about the mess ups in the beginning. Go read Buffett's letter if you haven't. If you read it, read it again, man. Find a few gems in it, man. Also, what was I going to show you? Oh yeah. Hold on. If you read this in the beginning of the newsletter, it's very similar to his letter, where I talk about first thing, invest in yourself, own a business, invest in business, and then real estate. That's literally what Buffett talks about. He just does two of them, but same thing, man. I've modeled most of the things I do in a bigger picture way after his model of buying assets that produce cash flow, taking the cash flow and putting it into passive things that I don't have to spend a lot of time on that pay me more cash flow, that are tax sheltered. So that's kind of the theory behind that, man. Appreciate you guys.